Welcome to Java. It's March 13th, 2025, and it is also Thursday. It is a bit early, much more prior to the markets open, so I will not be having some numbers that I would like. We are expecting producer price inflation numbers a little bit later, the PPI coming in, and that could have an effect on markets. It is also the bloodworm moon eclipse on the 13th, which is this evening. And I believe that has an effect as the markets are driven much by emotion, mostly by fear, whether it's fear of losing or fear of missing out, which are essentially the same thing, one stronger than the other. So, with this, let's take a look at what's going on in the markets today. We've got the MMRI, the 10-year yield, and the relative strength of the dollar both increasing today. Now, yesterday they had a significant drop that allowed the markets to run a bit. And with that, I would like to say that the technical setup across multiple charts are showing that this is most likely probabilities, not financial advice, but the probabilities are showing that these are indeed bull traps, or you can say dead cat bounce that we were talking about coming in. Now, with this, we've got the fear greed meter showing extreme fear. So a lot of retailers still dropping out. It's a bit higher than it was earlier on in the week. But with this, let's take a look at some of the drivers. Now, the PPI numbers, producer price index, does not have as much of an effect as the core inflationary numbers that we got yesterday. Still could be market moving. So again, if the inflation comes in weak, that is saying that the Fed has the ability to cut more, so that's positive for the market. So watch those numbers coming in. We get consumer sentiment, and I put that in quotes because it's their polled sentiment, not necessarily on the streets, comes in Friday. So I had mentioned that blood moon. Now, there is a lot of psychology to investing. I know quite a few investors that successfully trade with these cycles of the moon that they also do their technical analysis with. So, just something to keep in mind, plus, very cool thing to observe if you get the opportunity and have clear skies. Now, as this was yesterday, we still have the smart money, institutional money, selling into the pups. So this opening that I expect, despite what we're looking at with the green, I expect more of a weak opening due to these pulling back. It could go green, but we're going to watch that 10-year yield. As always, now, as I said, I'm very early with this, so the number's not really in. We're watching the futures are also saying there's a bit of weakness later on today in the cards for the market. Now, we've got gold right at 2,949.40. What we're watching for, this is at resistance again, but this is for the third time. So it's been bouncing against this level, and if it breaks this resistance, that in itself is a sign for markets to kind of take a hit, if you will. Now we've got crude oil is increasing again. It's above 67, still trading in a range, but really what we're watching is a lot of the talks for the treaty that is going on with Ukraine is supposed to be presented to Russia. We'll see how they react. With that, that could affect that number significantly. So caution on that. We've got the calendar earnings. Everything this morning, the reports happening prior to the market open. We get everything 8:30 in the morning. The jobless claims, the core PPI and PPI year over year. That again is producer price inflation, the index. So what this tells us is if they have to pay more to create these goods, they're going to pass on that cost. So inflation coming up in the long run. And then again, Friday, we're getting consumer sentiment at 10 a.m. These are the runners. Now, with a few individual stocks, we've got kind of a harbinger of more small to medium businesses, what has been going on. The maker of Roomba, those are the small automated vacuum cleaners. And they were in a deal earlier, possibly for Amazon to buy them out. that fell through. So now they've got substantial doubt about surviving. So a lot of businesses, more of them will be going out, being merged, purchased by others because they can't make it in this environment with the inflation running up and consumer demand dropping. This also hit airlines yesterday as they showed that the former demand was higher than what they had expected. And going forward, their earnings are going to take a hit as there are less bookings coming through. Now we've got Intel, one of the chip makers, has been taking a hit. They've got a new CEO. This is making the stock jump a bit. They've got a lot to do before they've got to turn that one around, but they've got quite a few areas that they can work on, if you will. So Intel in the news trading today. The interesting one that I found is Volkswagen. They are welcoming weapons opportunity. This company is hurting so bad in the auto industry that they're saying all options are on the table. And after the European Union announced the multi-billion dollar Euro militarization plan that we were speaking about yesterday, they are pouring all of their money, concentrating into the defense budget. So now we've even got their major automobile manufacturer looking to swap to get into the weapons industry. So that just tells you how incredibly powerful that is. And it will be defense spending and war continuing one manner or another because war is good for the budget. It's big business. Now we've got Amazon, Google, and Meta joining the push to triple global nuclear capacity. So this is in a positive direction for the nuclear capacity, and this is for the energy, of course. They are looking forward for the artificial intelligence driving this energy demand. We've been speaking about this. China has even turned back to coal, which is considered one of the dirtier forms of energy. But this is kind of what crushed energy in the first place, going to green policies, which is ironically sustainable energy is not really economically sustainable, and it's also not as environmentally friendly as one would put forth. So, with all of these moving back towards nuclear, which does take some time to go, but positive for that space, thinking uranium and forward. Now, again, just a reminder in that eclipse because it's uh, something very interesting, not just for the markets, but again, the timing of everything coming forward. And if you're on the Discord last night, you know what we're talking about is just interesting. So we'll be watching. There could be either more flush or a reprieve, and this could happen a little bit later in the fall. Now, I did want to speak more. I've been talking about this genius stablecoin bill. Now, I'm not the only one, DeFi exec coming out saying that this is a CBDC Trojan horse. So, centralized stablecoins featuring all of the hallmarks of a CBDC, including the ability to freeze tokens. This is a direct quote from him saying that the government realizes that if they control these, they control financial transactions. And working with centralized stablecoin issuers means that they can freeze funds anytime they want, which is essentially what a CBDC would allow. So why bother creating one? Well, I've been talking about this for a while, that this essentially is a CBDC. And the more interesting part to watch is not just freezing funds, but fully programmable, fully trackable, and these are the execs that have been meeting in the White House. So there's a lot more to this. It is that CBDC. We're just not calling it that. And that way, as I've been saying, makes it more palatable for people to accept. We are on the verge of, as these markets drop and as a lot of this chaos comes in, it would very easily help with some of the ailments that are happening, not just with the government, the issuing system, with all of these fallouts that are happening. So this could be the solution that very easily takes that place. So with this, I wish you all a wonderful trading day if you're trading, or just a good day in general. And until I see you again, my friends, stay free.